There is a moment every small account trader experiences. You see your setup. It is clean. It is exactly what you have been waiting for. Your rules say, take it. And you freeze. Not because you do not understand, because the size makes the loss feel too loud. And in that moment, most traders do one of two things. They hesitate, or they overcompensate. They either miss the trade entirely, or they take it bigger than they can handle, just to feel decisive. And that is not commitment. That is discomfort management. And that decision does not blow you up immediately. It just starts the countdown. Let me show you why. When you start with a small account, you bring assumptions with you. Reasonable assumptions. Assumptions that work everywhere else in life. More effort equals more results. Bigger risks mean bigger rewards. Playing it safe gets you nowhere. So you look at 1% risk and you think, this is meaningless. I cannot build anything with this. I need to be aggressive. And this is where it starts. Not the trading mistakes, the psychology that creates them. Because here is what happens when you risk too much. The trade becomes personal. Not just a trade, a test, a referendum on whether you belong here, whether you are smart enough, disciplined enough, whether this whole thing was a mistake. And when a trade becomes personal, your brain detects threat. Not a trade that might lose, a threat to your identity, to your future, to your sense of being okay. Here is the part nobody sees. Your nervous system does not care about your strategy. It cares about survival. And when survival instincts activate, rational thinking shuts down. This is not weakness. This is biology. Watch what happens next. You see your setup. Your strategy says it is valid. But you hesitate. Because if this loses, that is too much of your account gone. You cannot afford it. So you wait. You need more confirmation. Just a little more proof. And while you wait, the trade moves. Without you. Now you are angry. You tell yourself, next time I will not hesitate. I will be ready. But when next time comes, the same thing happens. Because the problem is not your confidence. The problem is that your brain is trying to protect you from a threat it genuinely perceives as dangerous. So you do what most traders do. You take the trade late. After the best entry is gone. You jump in out of frustration, out of fear of missing out. And you enter at exactly the wrong moment. The trade pulls back, stops you out. And now something else activates. Not just fear. Urgency. I need to make that back. I need to recover. So you take another trade. Not because it is a good setup, but because you are reacting. This is revenge trading, and it comes directly from one thing. Risk you cannot handle psychologically. Most traders think this is a discipline problem. They think, I just need to be stronger, more committed, more focused. But that is not what this is. This is where it flips. This is not about discipline. This is about whether your nervous system feels safe enough to let you follow rules. When you are calm, following rules is effortless. You know what to do. You execute. But when you are afraid, following rules becomes almost impossible. Because fear overrides logic. That is how survival works. You cannot override threat with motivation. Your willpower does not stand a chance when your brain thinks survival is at stake. And when your position size is too large, your brain interprets every tick against you as danger. It interprets drawdown as threat. And it takes over your decision-making to protect you. Let's be honest about what's happening. When you are undercapitalized, every trade carries extra meaning. It is not just win or lose. It becomes progress or delay. It becomes hope or disappointment. It becomes, Am I moving forward, or am I wasting my time? That is why small accounts feel heavy. Not because the numbers are small, because the timeline feels urgent. You are not trading the chart. You are trading your timeline. You are trading with a deadline you invented. Every loss feels like you are falling behind. Every missed opportunity feels like time wasted. And that urgency creates pressure. Pressure creates fear. And fear destroys execution. So the question is not, how do I become more disciplined? The question is, why does discipline disappear the moment risk feels threatening? Because once you understand that, the mistakes stop looking random. They start looking predictable. And predictable problems can be designed out. Let me walk you through the specific ways this shows up, because understanding the pattern is the first step to breaking it. First, hesitation on entries. When risk is too big, you start second-guessing everything. You see your setup. You know it meets your criteria. But something stops you. You think, maybe I should wait for more confirmation. Maybe I should see what happens first. And while you are thinking, the trade moves. It works, without you. Now you feel frustrated, angry at yourself. You promise to take the next one. But when the next setup appears, the same fear is there. So you hesitate again. Or worse, you take it late, after the move has already started, and you get stopped out for a loss. This creates a terrible cycle. You cannot trust yourself. You cannot execute with confidence, and your results suffer. Not because your strategy is bad, but because fear is controlling your timing. Second, moving your stop loss. This is one of the most destructive habits in trading, and it almost always comes from having too much risk on the line. You place a trade with a logical stop. A stop based on market structure, based on your system rules. And at the time, it feels reasonable. But then price approaches your stop, and suddenly that loss feels unbearable. You cannot accept it. So you move the stop a little further away. You are up $38 and you feel relief like it is $3,800. You tell yourself it is because you believe in the trade, because the setup is still valid, because the market just needs a little more room. But that is not the real reason. The real reason is that the loss is too painful to accept. So you do whatever you can to avoid it. And sometimes the trade comes back. You feel relieved. You feel like you made the right choice. But most of the time, it does not. You move the stop 2 ticks, then 2 more. Then you are in a trade you do not recognize anymore. And by moving your stop, you turned a manageable loss into a larger one. You violated your risk management. You created a pattern that will destroy your account over time. Third, cutting winners early. When you have too much size on, profit feels fragile, like it could disappear at any moment. So when the trade moves in your favor, you feel this intense urge to lock it in, to take it off the table before the market takes it back. You exit too early. Then you watch the trade continue without you, and you feel frustrated. But you do not realize this is not a targeting problem. It is a position size problem. If the position were smaller, you would not feel that urgency. You would let it run. You would let your edge play out. Fourth, holding losers too long. This might seem contradictory, but it is actually the same issue. When a trade goes against you and you are risking too much, you freeze. You cannot pull the trigger. You hope it will come back. You tell yourself it is just temporary. You hold through your stop. You hold through your rules. You hold because accepting the loss feels like failure. And by the time you finally exit, the loss is much larger than it should have been. All of these mistakes, hesitation, moving stops, cutting winners, holding losers, They all come from the same root cause. The position is too large for your mind to handle. And your mind is trying to protect you in the only way it knows how. By taking control away from your rules and giving it to your fear. Now here is where most traders get stuck. Because the natural response to all of this is to try harder, to be more disciplined, to force yourself to follow the rules. But that does not work. Because this is not a willpower problem. This is a nervous system problem. Your brain is doing exactly what it is supposed to do. It is protecting you from perceived danger. And no amount of determination can override that when the threat feels real. So what is the solution? You remove the threat. You trade at a size where your brain does not perceive danger. And I mean really small. Smaller than feels significant. Smaller than feels like you are trying. Your ego will hate this. Your ego will say, "What is the point? I am not going to build anything risking this little. This is a waste of time." Real traders take real risks. This is what losers do. But your ego is wrong. Watch what happens when you trade small. The trade stops being personal. It stops being about whether you are good enough. It just becomes an execution. Another opportunity for your system to play out. And when the trade is not personal, something unlocks. You can follow your rules. You can see your setup and take it. No hesitation. You can set your stop and honor it. You can let the trade run without cutting it early. You can take a loss and feel nothing. Because it is just one trade. It does not mean anything about you. This is the state where good trading happens. Emotionally neutral. Not attached to outcomes. Just executing your process over and over. But here is where it gets deeper. Where this moves beyond just execution. This affects your identity. When you trade too big, every loss challenges who you think you are. It says, maybe you are not cut out for this. Maybe you do not belong here. Maybe you made a mistake thinking you could do this. And you cannot build consistency when every trade is questioning your identity. But when you trade small, losses stop being identity threats. They become information. Just feedback from a probabilistic system. One trade loses. Okay, that is one data point. Next trade. Another loses. Okay, that is two. My system says I should win about 60% over time, so I need to keep executing. You stop personalizing outcomes. You stop making every trade mean something about you. You just execute and let the probabilities play out. And that shift changes everything. Most traders never make this shift because they are focused on the wrong goal. They think the goal is to make money, to grow the account, to prove they can do this. But that is not the goal, not at first. The goal is survival. Survival means staying in the game, not blowing up your account, not quitting because you are too emotionally damaged to continue. And survival requires something most traders resist: humility, patience, prioritizing process over results. When you trade with big size, you are prioritizing results. You are trying to force the market to give you what you want. But the market does not respond well to force. When you trade with small size, you are prioritizing survival. You are saying, I am going to protect my capital. I am going to protect my mind. I am going to give myself the space to learn and grow and build consistency. And over time, survival leads to profit. Not because you are taking big swings, but because you are compounding small edges without self-destructing. Let me talk about compounding for a moment, because most traders misunderstand it. They think compounding is about making huge returns, about doubling your account every month, about getting rich fast. But that is not what compounding is. Compounding is what happens when you can execute consistently over a long period of time without blowing up. It is the natural result of staying in the game, of not making catastrophic mistakes, of letting your edge express itself over hundreds or thousands of trades. And the only way to do that is to trade at a size that allows you to stay calm, to stay rational, to stay consistent. When you trade too big, you interrupt the compounding process. You have a good week, then you give it all back in one bad trade. You build your account, then you destroy it trying to force a big win. But when you trade small, you create the conditions for compounding to actually work, because you are not sabotaging yourself. You are not letting fear or greed derail your process. You are just showing up, day after day, trade after trade, letting the numbers do their thing. And over time, that adds up to something significant. Not because any one trade was significant, but because you were able to stay in the game long enough for the edge to work. Here is what trading small actually looks like. You risk 1% per trade. You see a setup. You take it. The trade works. You make 1.5 times your risk. You look at the profit and loss. It is green. And for the first time, you do not feel urgency. You do not feel the need to grab it. You just let it work. You take another trade. It loses. You lose your 1%. You look at your account. You feel nothing. No panic. No need to make it back immediately. It is just one trade. Another trade. It works. Twice your risk. Still nothing. You are just executing. After 20 trades, maybe you won 12 and lost 8. Your win rate was 60%. Your average winner was a little bigger than your average loser. Your account grew by a small percentage. And you might look at that number and think, that is nothing. I barely made anything. But you are missing the point. The point is not the percentage. The point is that you executed 20 trades without emotional interference. You followed your rules 20 times. You did not hesitate. You did not move stops. You did not cut winners early. You did not revenge trade. You traded the way you are supposed to trade. And that is worth everything. Because you just proved something. Not to anyone else. To yourself. You can do this. You can execute a process. You can stay calm under pressure. Now you can do it again. And again. And over time, that consistency compounds. Not because you are taking huge risks, but because you are avoiding huge mistakes. Now watch what happens when you try to force it. When you try to grow a small account too fast. You take a trade with 10% risk. It wins. Your account jumps significantly. You feel incredible. Powerful. You think, this is it. This is how I am going to make it. I just needed to be bold. So you take another, same size. This one loses. Your account drops back down, back where you started. But emotionally, you are not back where you started. You are destroyed because you had it and you lost it. And that feels worse than never having it at all. So you take another trade, bigger this time, 15% risk, because you need to make it back. You need to recover what you just lost. And this one loses too. Now you are down significantly, and you are panicking. You think, I need to stop. I need to take a break. But stopping feels like quitting, feels like admitting you failed. So you take another trade, and another, And before you know it, your account is gone. Not most of it, all of it. Not because your strategy was bad, but because you could not handle the emotional swings that come with oversized risk. This is not a hypothetical pattern. This is what destroys accounts. Over and over. I saw it with almost every struggling trader I worked with. The story was always the same. Good strategy, smart person. But they were trading at a size that made it impossible to execute properly. Here is what small size actually gives you, and I want you to really understand this. Freedom. Freedom from constant anxiety. Freedom from obsessively watching every tick. Freedom from the fear that one trade could ruin you. When you trade small, you can place a trade and walk away. You can let it work. You can trust your system. You can take a loss without feeling devastated. And that freedom changes everything. Because when you are free from fear, you can finally trade the way you are supposed to. You can see the market clearly. You can execute without hesitation. You can follow your plan without internal conflict. And that is when trading becomes what it is supposed to be. Not a battle, not a test of your worth, but a calm, methodical execution of a process that has an edge. But there is something deeper happening here, something most traders never recognize. When you trade too big, you are trying to control the outcome. You think, if I am focused enough, prepared enough, confident enough, I can make this work. But that is an illusion. You do not control the market. You do not control what happens in the next 5 minutes or the next 5 hours. You do not control whether this specific trade wins or loses. All you control is your execution, your risk, your response. And the bigger your position, the less control you actually have. Because the bigger the position, the more your emotions interfere. The more you second guess. The more you deviate from your plan. Small size is not giving up control. It is actually reclaiming it. Control over your mind. Control over your process. Control over your ability to stay in the game long enough for your edge to work. Let me tell you what I learned from watching traders who made it. Traders who survived. Who built consistent track records. Who were still trading years later while everyone else had quit. They were not the ones with the best strategies. They were not the smartest. They were not the most aggressive or the most confident. They were the ones who understood one thing. Durability matters more than brilliance. They were durable. And durability comes from trading in a way that does not burn you out, that does not trigger your worst impulses, that does not put you in a position where one mistake can end everything. Excitement is overrated in trading. Excitement is what gets traders into trouble. Because excitement is just another word for emotional intensity. And emotional intensity is the opposite of what you need to trade well. What you need is calm, clarity, consistency. And you get that by trading at a size that feels boring. A size that does not spike your adrenaline. A size that lets you focus on execution instead of outcomes. Here is the truth your ego does not want to hear. Trading is not personal. The market is not testing you. It is not judging you. It is not rewarding your confidence or punishing your doubt. It is just moving according to probabilities. And your job is to participate in those probabilities without distorting them with your emotions. When you take a big position, you make it personal. You turn a probabilistic event into a referendum on your worth as a trader, as a person. And that is a game you cannot win. So let me ask you a question, and I want you to really think about this. What is more important? Making money this month? Or learning to trade in a way that will make you money for the rest of your life? Because if you prioritize making money now, You will take too much risk. You will let fear control your decisions. You will make the same mistakes everyone makes. And you will probably blow your account. But if you prioritize the process, if you prioritize learning to execute without fear, if you prioritize building consistency, then you give yourself a chance. A real chance. Not to get rich quick, but to become a trader who can survive. And survival is everything. Because if you can survive long enough, if you can execute your system cleanly enough, the results will come. Not because you forced them, but because you created the conditions where your edge could finally express itself. Let me tell you what success looks like with a small account. Success is not doubling your money in a month. Success is not making your first big win. Success is executing 50 trades and following your rules on 48 of them. Success is taking a losing streak and not panicking. Success is seeing your setup and taking it without hesitation. Success is being able to trade tomorrow because you did not destroy yourself today. When you trade small, you are not settling. You are not playing it safe. You are not being timid. You are being smart. You are recognizing that trading is a long game. And the traders who win the long game are not the ones who take the biggest risks. They are the ones who survive the longest. The ones who can execute consistently without self-destructing. Here is what I learned. And this took me years to understand. Fear of loss is not something you overcome by being braver. It is not something you fix with discipline or willpower. Fear of loss is something you remove by removing the conditions that create it. And the primary condition that creates fear of loss is risk that is too large for your mind to handle objectively. When you trade small, fear goes away. Not because you stopped caring, but because there is nothing to be afraid of. A small loss is not scary. It does not threaten your account. It does not threaten your sense of self. It is just part of the process. And when fear is gone, you can finally trade the way you are supposed to. Calm, rational, consistent. I want you to try something, an experiment. For the next 30 trades, cut your position size in half. If you have been risking 2%, risk 1%. If 1%, risk 0.5%. Make it small enough that the outcome of any single trade does not matter. Then, just execute. Follow your rules. Take your setups. Manage your stops. Let your winners run. Take your losses. And watch what happens. You will feel calmer. You will execute better. You will follow your rules more consistently. You will stop second-guessing yourself, and your results will probably improve. Not because you are risking more, but because you are interfering less. That is the truth about fear of loss and small accounts. The solution is not to trade bigger to make more money faster. The solution is to trade smaller to remove the fear. Because when the fear is gone, you can finally execute your edge. And when you can execute your edge, everything else takes care of itself. This is not easy to accept. Your ego will resist it. Your impatience will fight it. You will want to trade bigger. You will want to force results. You will see other traders talking about their big wins. You will see accounts that seem to grow overnight. And you will think, I should be doing that. I am wasting time. But that path leads to blown accounts and emotional damage. That path is littered with traders who had one good month and then disappeared. The path that works is the one that feels too slow, too small, like you are not really trying. But that path is the only one that works, because it is the only path where you can stay in the game long enough for your edge to express itself. And staying in the game is everything. Trade small enough that you can stay rational. Stay rational long enough that you can stay consistent. Stay consistent long enough that you can survive. And survival is what builds a trader. Not the biggest wins, not the most aggressive plays, not the boldest risks. Survival, consistency, process. That is what separates the traders who make it from the ones who do not. And it all starts with position size.